question I have for you, for the average punter out there, which is a better buy today, gold, silver, or crypto? Hello. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we have a very important show. You know, the title is actually QE Infinity. There was when will this printing stop? But really it's a discussion, which is better, gold, silver, or crypto? That's the discussion. And we have a very important guest today. It's John Adams. He's the chief economist for one of my favorite countries in the world, Aussie. And I've been going to Aussie since 1976. Well, I went there to play rugby, and it's my favorite sport. And needless to say, we lost every game, but we were good sports about it. But anyway, welcome to the program, John.
Thank you, Robert, for having me.
Thank you. So your topic is QE to infinity. And then you say there's no turning back now. And I totally agree with you. But I want to break it down to gold, silver, or what can a person do with crypto? So we have some kind of a solution. And if you can't endorse any of it, that's fine. But I love gold, silver, and crypto because we have an enemy in common. It's called the Federal Reserve Bank of America, which keeps printing. And I like what you said about there's no turning back. So before we begin, could you give us a little bit of your background and what you do today?
Sure. So in terms of what I do today, so I am an economic commentator here in Australia. My main YouTube channel is a channel called In the Interest of the People that I co-host with my with one of my partners, Martin North. I am the chief economist for a company in South Australia called As Good as Gold Australia. So we're South Australia's largest bullion dealership, and I've been with them for about 3 years. So we're helping largely the retail market acquire physical gold, physical silver. And in terms of my background, I've had a very diverse background from working in federal parliament, working as an economic advisor to a federal senator, being a bureaucrat at various levels of government, working for a big four accounting firm in terms of management consulting. And look, I've been a writer for a number of mainstream media organizations in Australia, largely about economics, but covering politics and a whole bunch of other public policy areas as well.
So first of all, what's going on in Aussie? Because, like I said, it is really, I had offices in 5 capital cities. I love Adelaide, I love the hills. And, but what is happening in the economy there? Because I hear your real estate is in a bubble and stuff like that. So what's the macro of Aussie?
Sure. So in terms of what I've been saying for the last probably 5 years is we have the biggest debt bubble in Australian history. At the same time, we've got the biggest debt bubble in the history of the world. Anytime I do any interviews with the people from the United States, I like to say to people that in the context of the household sort of debt bubble and the real estate debt bubble that Americans had before the global financial crisis, if you thought that was extreme, you pretty much haven't seen anything. The extreme, if you look at the Australian metrics, we are way more extreme in terms of real estate prices versus sort of income and sort of like in terms of income, but also household debt relative to income. But we are on much more extreme levels than the United States. But my revised position is that we actually have now three debt bubbles. Federal government here in Australia, state governments and territory governments will rack up unprecedented amounts of debt to basically save the other 2 bubbles. We had the biggest fiscal and monetary stimulus package in Australian history. And the reason why they were forced to do so is because without that stimulus, we would have seen record amount of delinquencies and defaults in terms of mortgages, and we would have had a financial crisis similar to what, for example, the United States and Ireland went through in 2007, 2008. So in order to avoid that outcome, kind of like what you said in terms of opening your show, in terms of central banks continuing to print, well, we had the biggest money printing campaign in Australian history, coupled with the biggest rack up of government debt. And when I say government debt in the Australian context, if you look at from July 2019 all the way through to the projected 2024, we're talking $975 billion over 5 financial years, and there's no plan to pay back the debt. There's no plan to balance the budget, and basically we've ruined 2 generations of Australians in order to save the financial system. The Australian economy is in a very dire predicament. And then the other thing I would say is in terms of how you open up the show about previous comments I made on other interviews about we can't turn back. Well, particularly in the Australian context, if we ever sought to normalize policy, what that's going to mean is that we're going to have high interest rate costs, and for a lot of households that are drowning in debt, they can't meet those repayments, and that will obviously then lead to the Harry Dent scenario of a deflationary depression. So the mentality, having worked in federal parliament and having worked in the mainstream media here in Australia, the mentality among the elite is that a deflationary depression is the worst outcome of all, and we must avoid it at all costs. And so that's why they continue to print and spend, and because of that, that's why I came out with a forecast of. Well, not just a forecast, but a statement that we are seeing the beginnings of stagflation here in Australia. And in the beginning of 2021, I said that with the election of Joe Biden and the $1.9 trillion stimulus package passed by Congress, and now a $2 trillion stimulus package on infrastructure, I think this stagflation process is going to accelerate.
So, because I first went to Aussie in 1976, and you guys had the same problem then. Because Aussies like to spend money, they travel a lot, have a good life.
Yes.
And their personal debt was high. And then the Aussie real estate prices, I mean, it's a great place to live. I bought 2 properties in Aussie, one in what was that place? King's Cross, and one in Rushcutters Bay. And I made a lot of money because the inflation was just going high as a kite. But I don't think they ever stopped borrowing money. And so the reason I want to interview you today is because, excuse me, Aussie might be the canary in the coal mine. I mean, because Aussie's economy and population is smaller, but it's very similar to America. Very, very similar. So you're saying there's a personal debt bubble. There is a real estate debt bubble, the same as the US. And now you have a nationwide debt bubble, right?
Yes. I mean, one of the points I'll make, Robert, is that when you look at if you look at the debt profile of American households before the GFC, a lot of poor people got into the real estate bubble
Right.
when they couldn't actually afford to be in the real estate market. The big difference between America and Australia is the bulk of the household debt is actually with high income people as opposed to low income people. And some Australian commentators have said, well, there's no comparison between Australia and the United States because people who can service the mortgages actually have the bulk of the debt. Now, the problem with that argument is that our debt profile is very similar to what happened in Ireland. So middle income to high income people in Ireland before the global financial crisis had the bulk of the debt. And then when the GFC crashed, when the GFC occurred, the Irish economy basically went through the floor. So while we have a different debt distribution compared to America, whether it's America, Ireland, or Australia, we are in a situation that we can never return to. And the other thing I will say is that because you talked about the 1970s, so we did have obviously stagflation both in America and Australia in the 1970s. But if you look at personal debt levels, so the last time we had a household debt bubble in Australia was actually in the 1880s, and we had a depression in 1892, which was actually worse for Australia compared to the Great Depression. And now debt levels for households are substantially higher than where we were in the 1880s on a proportional basis.
Well, one more question, because another one of my really favorite countries is Kiwiland, New Zealand, and the Great All Blacks. How does New Zealand's economy compare to Ireland and to Aussie?
Yes. So that they probably do have a very similar situation where they do have elevated levels of household debt, and they do have high house prices. But I would say that their situation is nowhere near as extreme as where we are here in Australia. So yes. So do they have a problem? Sure. But is it as bad as where we are here in down under? Probably not.
And a lot of Americans are running to New Zealand to hide. Have you heard that?
Yes, yes. I mean, if you look at, I mean, over the last few years, I've heard a range of stories of Americans losing confidence in the American government, in the American legal system, in the American economy, and a whole bunch of Americans want to escape. So New Zealand is definitely one of those locations where a lot of Americans have fled to. But the other interesting thing I should say, Robert, is that I've also heard a lot of Americans going down to South America, particularly in Chile, and no doubt, if you go down to the southern parts of Chile, you'll find a few expat communities being, I mean, they're developing and they're growing, and yeah, so that could be potentially another area where Americans may find refuge.
So would you, like, I'm not kidding you. I love Aussie. I just really, really do. Would you suggest Americans run there?
Um, well, I mean, the thing is, look, so probably what I would say is that there are some advantages, I think, living in Australia compared to the United States, but also I think there are definitely there are some disadvantages as well. So yeah, so I would say that the cost of living situation here in Australia is perhaps more pronounced than what it is in America. But on the other hand, while I think we have some corruption issues here in Australia, I don't think they're anywhere as close as to what the Americans have.
Yeah. For those who may not know, Australia really is like the promised land to me. It's, you have great medical, everything is great as long as you don't make your money there because your government wants to take it all the time.
Yeah, yeah. I mean that's probably another thing I would point out. Our tax rates are much higher than where the taxes are in terms of the United States as well.
Okay. So you're an economist for Good as Gold Australia. What does Good as Gold Australia do?
Yes, as good as Gold Australia. So we've basically been in business since about 2012. We're a retail dealership. So we basically we provide to the market gold, silver, platinum, and a whole host of retail denominations. We do storage, we do insurance, and yeah. So I mean, particularly as we continue to see money printing, central bank sort of central banks around the world get out of control. I mean, the owners of the business thought that it was time to help more Australians, and we have a growing international client base as well. Help more people escape the fiat currency system and get into gold and silver. Obviously, I've listened to you on multiple interviews, Robert, and I know that this journey for you started. But like, correct me if I'm wrong. Was it when you went to Vietnam or before Vietnam that you started buying silver?
I started buying silver in 64 when I was 17 because of Gresham's Law. Gresham's Law says when bad money enters the system, good money goes into hiding. So when I was 17 in 1964, they started debasing our dimes and quarters and half dollars. So there was a copper tinge around it. And I didn't know anything, but Gresham's Law does apply because immediately I didn't trust my dimes, quarters, and half dollars. And I started going to the bank and turning in dollars, paper dollars, and getting rolls of dimes, quarters, and half dollars. And I'd pull out the real silver. And I'd put the copper silver back in there. And then I go back to the bank and kept trading. The trouble was then I went to school in New York at 17, 18, and my mother spent my money. So it kind of made my point that poor people don't know good money from bad money. That's the biggest problem. My mom and dad had no idea why I was running back and forth to the bank as this kid, high school kid, turning in fake paper money, getting rolls of dimes, quarters, and half dollars, and pulling out the real silver and trading in. And my mother says, well, I spent it while you're in school. I'm going, and I think we're talking about why there's so many poor people is they don't know good money from fake money. And I'm going to have one more question to you, as I'm excited about. Here in America, you have the Perth Mint, and we've heard that there's a shortage of silver in Perth. I don't know if that's true or not. But when we come back, that's what I want to talk to you about, because the real subject here, it really is QE infinity. I don't think the banks can turn back. They have to keep printing. And the question is, what are you going to do? Gold, silver, or crypto, or Bitcoin, or Ethereum? So that's kind of my discussion today, because we've got to know good money from fake money. We'll be right back.
Are you worried about your financial security in these unprecedented times? If you are, the next minute could profoundly impact your financial security. Imagine waking up to find the economy has plunged and your portfolio has plummeted 30 to 45%, while banks are in turmoil, holding your money hostage while waiting for FDIC intervention. Where would you turn? For many, this may sound like fiction, but it's a stark reality for those that have money on the line. Recently, America's awoke to both the NASDAQ and the Dow, plummeting over 1,100 points each and triggering a frenzy of sell-offs. History shows us how a single event can crash the market, like the dot-com bubble of 1999, the subprime mortgage crisis of 2008, and the pandemic of 2020. But today, we're facing multiple bubbles: commercial real estate, stock, bonds, and banks. Combined with the relentless inflation, the threat of global recession, the specters of war, and you have the perfect storm. The consequences could be catastrophic, plunging us into unprecedented crisis. America is sliding in the age of discord, with trust in institutions collapsing and the democratic norms unraveling. The quality of life for Americans has declined. Wealth is concentrated among the rich, while the median American family income stagnates, creating a dangerously top-heavy social pyramid. Moreover, hostile countries like Russia, China, and Iran are working to destroy the U.S. dollar. Gold is a no-matter-what store of wealth that you need. That's why Robert has been such an advocate of gold, and he trusts Allegiance Gold. Allegiance Gold is ready to help you incorporate physical gold as part of your portfolio and protect it against economic uncertainty. Visit protectwithrobert.com today to learn how you can qualify for up to $5,000 in free silver with a qualifying investment. Or give them a call at 844-3-ROBERT. Remember to mention Robert and Kim sent you when you contact Allegiance Gold. Secure your IRA or 401k today with Allegiance Gold. Visit protectwithrobert.com or call 844-3-ROBERT.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today our guest is John Adams. He's an economist for Gold Gold Australia, my favorite countries in the world. And if I was going to run, I'd run to Australia because it is heaven. It is a fantastic place to live, except you don't want to make your money there. And and we're going to be discussing, his topic is QE infinity. In other words, can they stop printing? I don't think so. And that next question goes, where do you go then? Gold, silver, or crypto, Bitcoin, or Ethereum, or whatever they got today.
If you think in the classical Austrian school, let's say Ludwig von Mises, about what is inflation? Inflation is the expansion of the money supply. So to have deflation, what that means is the money supply must shrink. And the only way in the current context of that's going to happen is that the debt is going to shrink. And how are you going to shrink the debt? You have to have a series of defaults. Now, every time we've had a point of crisis since 2008, the central banks and the national governments around the world continue to print and spend to stop the debt bubble from imploding. And so far that has been successful. So whether you think about the sovereign debt crisis of 2012, or for example, the repo crisis in New York in 2019, or COVID-19 2020, or even if you look at the end of February 2021 in terms of how the bond market, particularly not the United States, but it started to spread to Australia, Japan, and Germany. Every time there's some sort of systemic risk coming to the fore, they try to print and spend and provide liquidity so that you don't have that sort of situation from occurring. We're going to see more of an inflationary situation moving forward compared to in terms of deflation. And I know we're about to get into this conversation about gold, silver, and crypto, but what I would say to your audience is portfolio allocation is changes so dramatically compared to if you believe deflation's coming, your portfolio allocation would be dramatically different compared to if you believe that we're going to have some sort of inflationary outcome. Before investors start to think about, well, how do I allocate my capital? You really have to get the macro picture right. Obviously I've been studying economics for more than 20 years. But I know a lot of people who do believe in the inflationary scenario, and there are some who believe in the inflationary scenario. So I think that investors need to really get their head around, what have the central banks and the government's been doing since 2008? And do we see any prospect of any changes moving forward?
So let me give you a chance to promote Good as Gold Australia. You know, you say you sell to people outside. Why would an American? I mean, the real reason I would go to Australia is behind your head. It's Sydney Harbor. I mean, that is the most beautiful place. You know, if there's going to be a crash, I'm going to go there and buy in real estate because that place is so gorgeous. So why would an American buy gold from Good as Gold Australia?
Well, I mean, the thing is, well, I mean, the United States has a history of gold nationalization. So some people call it confiscation, what FDR did in 1933, 34. And obviously, when you look at the LBJ, you had a problem in terms of the demonetization of silver. So so the American government has a history of doing adverse things to American citizens, whether it's and taking people's gold away, nationalization, making the ownership of gold illegal, or doing things with silver. We haven't had that sort of history here in Australia. So I do think that when you look at the context of property rights and your ability to protect your wealth from a legal point of view, I think there's less legal and political risk in Australia compared to the United States.
So for those of you looking at John Adams behind his head is a picture of Sydney Harbor, and that leads out to the Opera House. And you know, if there's a crash, I'm coming. What is the rumor about them not having enough silver?
Sure. So yeah. So now, one thing I will say is that we have a number of sources where we obtain product, gold and silver. So I heard stories of wholesalers not being able to buy large amounts of silver. But I've had numerous people who have said, well, I don't want small products. If you've got 1,000-ounce bars, I'll take those 1,000-ounce bars. And sometimes people have been able to get them. In a lot of cases, they have not.
What is an unaccounted or countable account? What is that?
Yeah. So in the American context, if you buy silver or gold and you have it so you buy the physical and someone holds it for you. I mean, in the American context, that's called allocated and segregated, whereas here in Australia, it's called allocated. Now, in the context of the Perth Mint, unallocated is so technically you don't own any silver, but you own a promissory note. But what you have, but in buying a promissory note, you buy an interest in the working capital of the Perth Mint. So obviously the Perth Mint has has X tons of silver that is on hand as part of their manufacturing process, and they basically say that you buy a share of that that unallocated pool. And so in that context, if the price of the silver was to move, well, you can obviously enjoy that price exposure by getting a cash redemption at the prevailing market price. Or the other hand is if you want to convert from unallocated to allocated, well, you pay a fabrication fee, and then they'll take that raw silver and then convert that into a bar that you legally will own. So that's what they call unallocated. Now,
That's
full
kind of,
allocated is
so it's not really a
slightly
futures
different.
contract. It's really you have an IOU to take delivery, but you
Exactly.
don't know it's
Exactly.
there. So this is so I'm glad I'm talking to you because as Good as Gold in Australia, as an insider, you know, like
Yes.
I love silver. You know, people see me on Fox television in America all the time saying, I love silver. And so the question I have for you, for the average punter out there, which is a better buy today, gold, silver, or crypto?
Well, in terms of my portfolio, look, so I don't own any crypto. And in terms of
Why is that? Why is that?
well, okay, well, probably three key reasons. The first is that we have a 5,000-year history with gold and silver, and cryptos have only been around for 10 years, or about 10 to 12 years. So we don't know if we had a really systemic financial crisis. Well, what's going to happen to cryptocurrencies? We don't really know. So I think that there's a lot of risk, a lot of market risk that a lot of people in the sector don't really understand because we've never gone through that situation before. That's point one. Point two is that the number one reason why people are buying cryptocurrencies is because it's going up. But one thing I like to do when I allocate capital is I like to get a very deep technical understanding of what I'm actually doing. And for example, Robert, if you gave me the code for Bitcoin versus Ethereum versus Litecoin, etc. I mean, now I'm an economist, but I'm not a cryptologist, so I can't tell you at a technical level what do these codes actually do, and what are the differences, and what are the risks, and what are the opportunities. And I would say 99.9% of crypto investors are not cryptologists, and they do not understand these underlying computer codes, what they actually do. And the other reason why they're buying them is because the price is going up. And if you don't actually understand at a technical level what these codes do, we don't actually understand the risk of the asset.
Right.
So that's point two. Now, point three is, so the funny thing is, I did a seminar in Adelaide last week with the School of Scott Australia, and in the Q&A, I actually had a question about crypto, and I actually asked the audience, and there was about 140 people in the audience, and I said, well, how many people here tonight actually own cryptocurrencies? And about half of the audience put their hand up. And I said, how many of you actually understand that in 1996, the National Security Agency in the United States wrote a white paper for MIT about cryptocurrencies? And only one person put his hand up. And so the real question I have is, well, who was Satoshi Nakamoto? I mean, because I dare say it could well be the American government is behind the whole cryptocurrency phenomena. Now, I've got some different theories as to why that is, but a lot of people, again, haven't looked into the history of cryptocurrencies. They don't know that the NSA wrote a white paper about this. And again, I think there's much more to the crypto story than what the average American or the average Australian investor are fully aware of.
I agree. I agree 100%. But I'm a trader in crypto. I'm not an investor. So if
I gotcha.
Do what I mean? So when it dropped to 7,000 a coin, I got back in. So still, I'm in the money quite a bit right now. And I know it can go to zero also. So I'm well aware of that. Whereas gold and silver are God's money. So I have lots of gold and silver. I have one quick question. Ozzy, your economy is really dependent upon Chinese, because you're a resource company. You're exporting to China. How many Chinese are moving into Aussie, and how is your relationship with China?
But yeah, we've had a lot of people from China. We have a lot of people from Southeast Asia, China, and India come to Australia every year because they come to get a university education here in Australia. And that process has been happening for the last 20 years. And a lot of the students, when they graduate, they decide to stay here in Australia as opposed to go back to China or India or wherever the case may be. So we do have a significant Asian population here in Australia, and like here in Australia, everything's going well, I think, from a social relation point of view.
How can people get in touch with you at Good as Gold?
Sure. Yeah. So I mean, in terms of myself, I'm on Twitter. So people can find me at Adams Economics. I actually have my own personal website, adamseconomics.com. So people can look up As Good as Gold Australia. We have a website, we have a YouTube channel. And yeah, thing is, feel free to reach out to me personally or reach out to the company. And if you're looking for gold, silver, platinum, and we're definitely happy to help. Yeah,
John, thank you very much. You live in God's country, except for your tax.
Thank you very much.
Thank you, man. Take care.
This podcast is a presentation of Rich Dad Media Network.